Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. I hope everyone had a great 4th of July. But the markets are back open today. What's going on? Well, they're down a little bit. The Dow's down about 100. NASDAQ's down about 30. The S&P sitting around 44.50. All right. Now, as you know, I actually think this market's getting ready to come in. Now, why do I think that? Why? Look at the VIX. I look at the VIX. Now, the VIX the whole month of June was below its 20-day moving average. But now the VIX is above its 20-day moving average. All right. So the VIX is still low, though, incredibly low, about 14. There's no fear in this marketplace. But if you go out and look at the options on the VIX, look at the options at the end of this month, the 14 strike price, you would have to pay about 10 times as much for a call as you would for a put. In other words, the VIX is mainly a professional traders platform, and they're betting that the VIX is going to move higher, which means volatility is going to come back into the marketplace. And when volatility comes back into the marketplace, usually means that the market's coming down. Now, once again, this is just my take. A lot of you believe that we're going to reach new highs, that this is the new bull market. We're only 250 S&P points off of a record high, and it is possible. It's possible we get there. I don't think we will. I think we're going to come back in. Once again, just my take. Your take may be the exact opposite, and that's perfectly fine. All right. Let's get over to the real estate side of things. All right, so most people would agree that wages are very important in the price of real estate, right? If you don't make enough money, you can't afford to buy a home. Now, in 1980, the average home roughly cost about $46,000. What was the average income in 1980? About $22,000. So $22,000, $46,000. So it's about 2 times the average income. All right. So let's move forward to today where the average price home is about $400,000. Rough numbers, $400,000, right? And the average income, rough numbers, about $50,000. So it's 8 times the income to buy the average price home. 1980, 2 times the income to buy the average price home. The affordability is not sustainable at these rates. Okay, now wages, the real wages have been coming down for 25 straight months. That's like a record or something. Real wages coming down, not going up. Now, a lot of people say, but Mike, I got a raise. I got a 5% raise last year. Yes, you did. And inflation was at 10%. You got 5%. So the real wages came down by 5%. That makes sense to most people. A lot of people will argue that they got the raise, so a raise is a raise. That's in nominal terms. So in nominal terms, maybe you did get a raise. In real term, your wages probably came down, right? Okay. So if you look at houses went up 20% a year, 20% a year, 20% a year, right? Okay, because we printed all that money. But now, okay, now what's happened to them though? How, did they go up in the last year? No, they actually went down. You say, but Mike, my area went up. Now, if you take into account inflation, right? Inflation, if you take it into account, which means the real cost of housing actually went down. The housing crash has already started. We've actually, in the last year, we've come down in nominal terms, but you also add on another, let's call it 8%. 8% for inflation means that you were down even more. There's no area that actually went up. Areas all went down if you take it in real terms. Now, a lot of people go, Mike, you can't take it in real terms. In my area, there's no inflation. We don't have inflation in my area. And in my area, prices only go up. And that's a great area to live in. And I believe you. I believe there's no inflation in your area. I believe that price is only going to go up. So if you stay in that one area, maybe you're going to be okay. But the rest of the market is already starting to crash. Now, where I live, San Jose, down 10%. You go to Phoenix, down 10%. Go to Texas, Austin, down 10%. But you got to add on inflation on top top of that, you see, the equity that people have is getting real expensive, and they don't have any way to tap the equity. They don't have any way to get their equity out. They can get a HELOC at 9%. Okay, that's a possible way to get some of the equity out. But in the old days, you could just refinance and pull your equity out. But now they're stuck. They're locked in at that 2.8%. They're locked in, right? So they can't get that equity out. Now, why are prices coming down? Now, the prices, nominal terms, were down about 1 to 3%, depends on the area, year over year, and depends on who you look at. Redfin, Zillow, they're not exactly the same, but down about between 1 and 3% nominal terms. Another 8% inflation that we had last year, which I think is a very conservative number, puts that fact down that in real terms, properties have come down by 10% just in the last year. See, the housing crash has already started. Now, why are prices coming down? There's no inventory. Everybody still has a job, but yet the housing crash has already started. Now, to me, that's just a foretelling sign of what's going to happen in the future. Now, this is where it gets really crazy. I know. I'm going to get a lot of haters for this because this is ludicrous. This is insane what I'm going to say. No one's going to believe this. But you see, what's going to happen is the Federal Reserve is going to make your job disappear. The Federal Reserve wants to make jobs go away because they want to fight that inflation, and they're going to fight it by taking away jobs, by raising rates until something breaks. Now, the Fed's going to pivot, right? They're going to pivot when that something breaks. When they see that, oh my goodness, we went too far, they're going to pivot. And I believe they will. They'll have to. But you see, what people are waiting for is the Fed to pivot. You see, the sellers are waiting for that so that they can put their house on the market. Once the Fed pivots, everybody knows that prices are going to skyrocket. They're going to take off from here. That's not my take at all. What's going to happen is going to shock a lot of people. A lot of people are going to be surprised when it happens. The Fed is going to pivot, and then you're going to see the houses crash. Why, Mike? Why would houses crash if the rates are coming down? You see, they're pivoting because there's a problem. Because too many people are then unemployed, right? Too many people. Let's call it 10 million people unemployed. You see, right now, we got 1.5 million people not paying their mortgage. And this is the good time. Everybody's got a job. There's no inventory on the market. They could sell their house and get out close to the price that Billy Bob got out. But they don't want to do that. They want to wait for the Fed to pivot because they think that's going to make it go up. Okay, now if you go back to 2008, and I'm going to ask you, this is a rhetorical question, but how many foreclosures do you think there were in 2008? I mean, was there 5 million, 4 million, 10 million? How many houses got foreclosed upon in 2008? Well, the answer is 800,000, not even 1 million, less than 1% of houses. Less than 1% of houses got foreclosed upon, went into foreclosure and got foreclosed upon. 800,000, less than 1%. Okay, so why did prices go down by 34% when less than 1% got foreclosed upon? Now, there were short sales. It was called jingle mail. You mail the keys back to the bank, and then they didn't foreclose upon you. And that was probably another 800,000. But it dropped the market by 34% before the Fed started printing $20 trillion since 2008. Really, I mean, that's like crazy, right? Now, just in 2009, they printed $4 trillion to pump the market back up, to make it go up higher. But it went down 34%. It would have gone down farther, but they started the printing of money, right? So, okay, so only 800,000 made it go down 34% because houses are sold on the margin. Look, it's not going to take 10% of the people in your neighborhood neighborhood to sell their house to make the house price go down by 50%. It might take less than 5%. It might even take less than 1%, because you see what happens is the buyers go away. The buyers disappear, right? Okay, the buyers disappear when they lose their jobs. 10 million people are going to lose their jobs after the Fed is done raising rates. And then they're going to pivot, and then they're going to get this lag time before the houses crash. The houses are going to crash. The crash is already starting in real terms, but in nominal terms, the housing crash is going to accelerate. It's going to come down. There's going to be homes that are half price, half off homes. A lot of people think that I'm an idiot, that Mike, you know nothing what you're talking about. The market is going to go straight up from here. There's a lot of moon boys out there, houses to the moon. And I wish they were right. I have nothing to gain by telling you this. I want house prices to go up. I make more money when they go up. I don't make money when they come down. My income goes away. It gets cut off. I want houses to go up, but that's not how it's going to play out. Now, why do I say this? Why do I say this? All right, so we got 1.5 million people right now behind on their mortgages in lieu of foreclosure, right? They could all go to foreclosure. But this is the good times. There's no inventory. They can sell the property. They can get close to what Billy Bob got. These are the good times. Look at 1.5 million in the good times. What happens when there's bad times come? When people lose their jobs, when the inventory starts piling onto the market. Now, here's the thing. You've got 10 million minimum 10 million broke baby boomers that are going to bail on their property. They're going to bail. You see, baby boomers were at retirement age and they're broke. All their money's in the house. All their money's in the house. They are cash poor. They have no cash. They have equity. And once they see that equity dropping, you're going to see a shock to this market like you've never seen. When the Fed pivots, that's when the shock's going to come, because that's when the inventory is going to jump onto the marketplace. A lot of sellers are making a big mistake right now. They're waiting for the Fed to pivot so they can sell and get a higher price. They think that the homes are going to go higher. Now, I get it. Some sellers, they're waiting for the Fed to pivot so that the mortgage rate will come down so they can, maybe trade their 2.8 in, because they want to grow bigger, right? They're in their starter home. So there are people that want to upsize. There are people that want to buy bigger houses, but they're locked in at this 2.8%. But maybe when the Fed pivots and maybe mortgages come down to 5%, I actually think they're going to get above 10% mortgages. It's a little scary, right? But okay, let's say they come down to 5%. Then that person can sell their house and trade up to the bigger one without taking that big of a hit on the difference in the mortgage spread between the 2.8 and the 5%. So they're waiting to sell for that reason, but a lot of people are waiting to sell for a stupid reason. They want to get the price that Billy Bob got. Everybody wants to get the price Billy Bob got. Well, I've got news for you. It's not going to happen. But okay, maybe you think it is. All right. And I'm fine with that. And maybe in your area, you're going to be the new Billy Bob. Let's hope for you, right? All right. But these baby boomers, and there's 10 million broke ones. There's about 40 million of them total. But 10 million of them, minimum 10 million, are already broke, waiting to dump their house so that they can go retire. Okay, that's their plan. Their house is their plan. And as soon as they see that equity going away, they will dump their house onto the market. They will be the first ones getting out. There's 10 million of them, right? And people are going to be shocked because they think when the Fed pivots, then the rates come down, that houses are going to be going up. And it's going to be counterintuitive. The Fed will pivot. Houses will be dumped onto the marketplace. Inventory will be dumped onto the marketplace. Forced selling will start to happen because everybody's going to lose their job. Now, people don't think that there's going to be a recession. Look, this is a little bit advanced here, but there's a yield curve, right? There's a yield curve right now. And when the yield curve's inverted, meaning that, okay, the 2-year is paying around 4.9%, right? Okay, so what's the 10-year? you're paying. Normally it would be above 4.9%, but it's not. It's inverted. It's down here at 3.8%. It's inverted by more than 100 basis points. This guarantees the recession's coming. Now, I know a lot of you say, Mike, we're not going to have a recession. We're just going to print money. And that's great. That's great. I don't hope they print money. I would like to see them not print $1 more because we don't have the money. They could hyperinflate this thing. I'm not saying that's off the table. They could. It's possible. It's possible that we hyperinflate, that we print another 20, 30, 40 trillion dollars, and maybe that'll make your house stay up here. But I don't think so. I don't think so. You got the boomers. The boomers want to get out. You got the people already delinquent, and this is the good time. This is the good time. Look it. They want to get what Billy Bob got, but they can't. They're waiting for the Fed to pivot so they can sell at the higher rate. It's not going to play out that way. Look, this is just my opinion. Of course, in your neighborhood, no inflation, prices only go up, nobody ever sells, no divorces, no deaths. And that's perfectly fine. I want you to live in that little world. In the real world out here, those things are always in flux. People dying, people getting divorced, people getting job transfers, people losing their job, can't pay the mortgage, baby boomers retiring, have no money, have to dump the house. Things are changing, and they're changing at a rapid pace. But what people don't realize is the housing crash has already started. Look, if you bought in the last year, a lot of people are already walking away from their mistake. They realize it. They see the writing on the wall, and I expect to get a lot of haters in there that just bought a house. Of course you're afraid. Of course your equity's going down. Of course you want me to be wrong. Of course you want prices to go up. And I hope they do for you. I'm on your side. I'm just the messenger of the other side of what I believe will happen. I want what you have. I want an area where prices only go up. I want an area where there's no inflation. The real world doesn't work that way. Anyways, I'm Tall Mike. If you like this stuff, give me the thumbs up. Why not? Get out there, everybody. Have a great day. Bye-bye.